need motivation and inspiration to get you off the couch and boss up? We've got you covered. Welcome to the Build or Destroy podcast. Self-improvement, education, business, relationships, financial literacy, investing, and doing for self. Let's do this. Here's your host, Anthony Barber Jr., aka The Builder.
What up, good people? It's another episode of the Build or Destroy podcast with your guy, the Builder. And this episode is based on a request. I got a DM, a few DMs actually, asking me to talk about this subject because I was posting about some tokenization things happening in the small cap space and things of that nature, and so I got a few questions about tokenization and like what I thought was like going to be like one of the biggest things, and some cool shit to invest in possibly in the near future or immediate future. And so I decided to cook this up real quick. I'm not gonna take up too much of your time, but in this episode we're gonna talk about asset-backed tokens a little bit and tokenized real estate. So let's get it. So let's get into this asset-backed token situation, right? So asset-backed tokens are pretty much digital currencies based on physical assets. You know what I'm saying? That are backed by, like I said, gold, crude oil, just like Venezuela, they have a supposed cryptocurrency backed by their, oil reserves, equity, soybeans, pretty much just about any other real physical asset can be tokenized and become, an asset-backed token, including real estate, which is what this episode is about. So, when you think of like asset-backed tokens, they're pretty much, they made a big evolution. They made possible, primarily because of the blockchain. You know what I'm saying? Bitcoin, of course, is the OG. Was the very first token and all that good stuff. But the cryptocurrency, Bitcoin, isn't backed by any physical asset. Let's just get that clear. Like, I know everybody wants to refer to it as a digital gold or things of that nature, but like it's not backed by any not any real physical asset, something you can like taste, touch, smell, like it's not, it's intangible. You know what I'm saying? It's intangible. Now the beauty part about combining, the blockchain, in cryptocurrency, which is intangible, an intangible thing, something you can't smell, taste, see, touch, with something that exists in actual reality is a beautiful thing, or can be a beautiful thing, because now you actually can put weight behind the intangible thing, and I know like the mystique that a lot of people have with cryptocurrency in general is the fact that it's mysterious. It's like smoke. You know what I'm saying? Like you can't physically hold it in your hand, because a lot of people are so apprehensive about Big Brother or the government or the boogeyman reaching into their pocket and messing with their stuff. They think oh yeah, this if we just keep it so mysterious and keep it so intangible that nobody can ever mess with it. It's like, you're right. You would have to shut off every computer, every satellite, everything to essentially like stop crypto. Like pretty much like all electronic shit would just have to shut down all over the globe, and then it would be over with pretty much, But my point in all of this is like reality still exists. You know what I'm saying? you might have all the Bitcoin in the world, but like you're not gonna live on the street necessarily. You're not gonna sleep on the street. You know, you're gonna have somewhere to lay your head. It don't have to be a mansion either. It's gonna be a domicile. Like you're gonna have a building or some type of structure that you're gonna, reside in. You know what I'm saying? Even if you choose to live a remote life, and try to live off grid or something like that, you're still living in a building. You're still gonna live in some type of, handmade structure or something, somewhere, and even if you spend your Bitcoin from that location, like the fact is, it's gonna be a building. It's gonna be some type of, structure, right? Which brings me to tokenized real estate and why it's so dope. Like everybody for the most part is always going to need somewhere to stay. People are always going to need somewhere to stay. You know what I'm saying? And the beauty of like tokenization is that, as far as from an investor point of view too, not just somebody that's trying to, buy an asset and own it or whatever. It's the power of leverage. It's giving you leverage via the blockchain to essentially take the value of that asset and trade it away like a stock. You know what I'm saying? Like, you're breaking it into pieces. You know what I'm saying? So, tokenized real estate as a whole is basically the process of real estate tokenization that involves converting a real estate asset into a token, i.e., via the blockchain and putting it up for sale. Pretty much, it's really that simple. You can create tokens for properties that are already under construction, tokens that represent an interest in real estate, or you can use tokens to raise capital. You know what I'm saying, for a potential investment. So like tokenization is a real powerful tool for leverage, especially from an investor point of view, and I know I primarily talk to people that are in the investment space. So like, but I'm also talking to people that are like new to the whole crypto thing. And before I go any further, I just want to say, like, in general, it's good to be, not just diversified in your crypto portfolio, but in your knowledge of crypto and your knowledge of tokenization, your knowledge of, tokenomics, and your knowledge of blockchain technology, and just how deep it really goes. Like once you start really learning, you gotta keep learning. Like it's always evolving, it's always changing, and it's always something to learn. And it just gets the rabbit hole just gets deeper and deeper, and it's really interesting and dope at the number of things that you realize that they're out there for you to like leverage it to your advantage. A lot of people jumped on the NFT wave, in the metaverse wave, because it's, and that's mostly driven by the youth, like, and I'm still really young, but like I'm talking about like the youth that's like middle school, high school still, like just breaking into their 20s, like those people, they're gonna be heavy into the meta. That's who the metaverse and NFTs are like. They're really catering to those crowds really big, because like they're going to be the ones that's going to push the creative envelope on that stuff, because NFTs are pretty much like virtual trading cards, but they go beyond, obviously they go beyond just that. And like I said, that's another episode for another day, so I'm not going to deep dive that. But, let's just keep it simple. NFTs, like for on a baseline, can be looked at like digital trading cards that can have special attributes added on top of it or layered on top of it for a myriad of purposes. You know what I'm saying? Whether it be tokenizing a basketball ticket game, or an NHL game or MLB game, or a concert ticket, to make it like a memorable thing, or it can be doubled as an entry ticket to like an event, or like an annual event. You know what I'm saying? Like, let's say the Catalina wine mixer wanted to like sell tickets to like the next 10 years worth of events, and there's going to be like an exclusive like after dinner party with like a bunch of celebrities at every event. And in order to go to these particular like specialized parties or something like that, you have to have an NFT to present to the doorman to get in. Like, you still can go to the regular part, but like after hours, when they do like the really cool, really specialized stuff, you know, the you know, in the back, so to speak, you know, you got to present this Catalina NFT, and then like you'll get like exclusive, like a backstage pass type of thing, you know. So like that's just on the NFT side, but like the youngins are gonna push that envelope heavy. You know, the youngsters are gonna push that heavy. And it's gonna be some crazy stuff coming out of that. But besides, you know, the NFT stuff, you know, when it comes to like people breaking into crypto or blockchain and they don't really know shit, it's just like, because there's so many things, you're getting hit with so many things all at once. You got all these different projects, all these different blockchains. People are throwing out terminology. The lingo is changing every day. And if you're not really in the space, you're not really going, it's going to be so fast. It's like learning trig, you know what I'm saying? You put somebody that hasn't even learned basic arithmetic in front of a trigonometry professor, and they're going to look like a dunce cap. Like, they're not going to really understand what the hell is going on. They're not going to be able to follow along with the curriculum. And that's how I feel like the blockchain space kind of treats people that aren't really familiar or that are kind of apprehensive. Like, they kind of shun them and like don't really accept them with open arms and try to like educate them properly and try to really understand that a lot of people, you're gonna have to slow roll a lot of people into this space, man. If you want true mass adoption, and you don't want the government to be behind it in a gigantic way and be able to manipulate the masses, which I think is inevitable anyway, because like it's not enough people really taking their time to teach people this stuff and to really like have these conversations over dinner and to like change the narrative when they're around their homeboys or their homegirls, or when they out at an event, or when they at a family function. Like, these conversations not really being brought up. It's the same typical bullshit that people talk about all the time, or that what's going on the news, or whatever typical drama is happening in the world. People stick to that simple lane. They don't talk about far out subjects, you know, because they don't want to seem stupid or weird. You know, it's like one of the two. Either they don't want to sound stupid to family or friends, or they don't want to come off as the weirdo. So they just don't even bother bringing it up. You know, your 13 or your 14-year-old nephew might be sitting on $1 million worth of NFTs in Ethereum. You know, he might have $1 million worth of Ethereum and tied up in NFTs, and you will never know it, because he don't even want to talk to you about it, because you so anti-tech, or you so anti, you know, whatever the new shit that the kids is doing. Like, you so anti that, or it just doesn't make any sense to you. So you browbeat them, or you browbeat your daughter or your niece, and then they don't even want to fuck with you. They don't even want to talk to you about it. But meanwhile, they got a bigger bankroll than you. They just can't legally move out of your house yet. And then when they turn 17, 18, and then they go to the dealership and cop a Lambo or some wild shit, and then peel off, you're going to be looking crazy. You're going to be like, wait a minute, how'd you afford that? And they're going to be like, never mind. You know, I'll holler at you at Thanksgiving. You know, you're going to be looking crazy. But back to business. So tokenized real estate is one of those things where it's like, you have a lot of people that, like myself included, that like have been invested in like real estate for years, you know, or just getting into real estate. You know, it might be people that might have just bought their first rental property or something like a year ago or so during the pandemic or whatever, or before the pandemic. And they just got their feet wet, right? So real estate is something that they remotely feel comfortable with. Well, guess what? Now they have a vehicle or an arena to go and play in that they have some familiarity with, and that they can speak articulately about, and that they know a lot of the ins and outs, or even if they're fairly green to the market space, they understand it from a baseline level. You know what I'm saying? They're not basically they're not intimidated by it, is what I'm saying. Like they would be, let's say NFTs, or like buying crypto, or like seeking out the best type of crypto projects. Because let's be real, like reading some of these white papers can take, you know, hours, man, days, to really like try to like digest some of this shit. The tokenomics alone, like a lot of these projects, they're so complicated. They make it sound so over the top. Like, you have to really read that shit over and over and over and over again, and then cross-check it and cross-reference it with something else for you to really get the gist of it. You know what I'm saying? Average person ain't got time for that shit. They got other shit going on. You know what I'm saying? This is another thing that I always stress. You know, quit judging people. You don't know what, like, people don't have your life. Like, you know what I'm saying? Like, I'm pretty well off, but even I like feeling normal. Okay. Like, I love investing. Investing, like, changed my life. You know what I'm saying? You know, getting really good in financial things changed my life. Let's not get that twisted. I'll tell people that in a heartbeat. Like, yeah, it changed my life. Learning how to invest changed my life. Learning how to trade changed my life. Being serious about investing changed my life and my family's life for the better. You know what I'm saying? It gave me a new lease on life. It showed me another way to get to some prosperity. You know what I'm saying? Other than like going a crazy route or just putting my nose and just grinding it out, you know, because you're not gonna be rich working at a job. You know what I'm saying? You feel me? Like, you're never going to be rich working at a job unless you have like a really high paying, high yield position at a big company or something like that, and you're not even saving that salary because you're trying to keep up with the rest of your fellow employees at that level. A lot of people that make $100,000, $300,000 a year, they in debt just like a person that's making 55 or 20. They in debt too. Their debt is just different than yours, but they in debt. It's not like a lot of them are financially acclimated or like financially attuned. You know, they're not really tuned up. You know, I met plenty of people that make a shit ton of money that's not tuned all the way up when it comes to financial matters. Like, they blow money like it's going out of style. Like, they throw money away like a motherfucker. Like, it's crazy. So when it comes to like that type of judgmental shit, like, cut it out. You know what I'm saying? Because a lot of people are going to be able to steamroll the people that are, I would say, more book smart when it comes to blockchain and crypto. Like, and when I say book smart, I mean like people that can speak the lingo, people that know kind of what's going on in the market and things of that nature, but they're not really like, you know, they don't really have a lane picked out necessarily. They don't have an arena that they really, you know, thrive in necessarily. They just kind of like, they're in the club. They're not the club owner. They're not the doorman. They're not the bouncer. They're not the bartender. They're not the person that orders the supplies. They're not the cook. They're just like another patron in there buying drinks and dancing and starting fights. Like, that's what they are. They're not really involved in trying to make the most out of it necessarily. They just like having a good time. You know what I'm saying? And I'm talking to the people that's like, hey man, if you in real estate or if you wanted to get into real estate, this is one of the best times to jump in, especially with everything being tokenized and how it is. It's like the stock market, but for houses or for property, I should say. So like tokenized real estate, like I said, it's the process of, you know, real estate tokenization, which involves converting a real estate asset into a token on the blockchain and putting it up for sale. Like, it's literally as simple as that. You know what I'm saying? You're converting the real estate, like you're taking the whole property and you're converting it into a token, or tokens, I should say, predicated upon the overall price of the property. You know what I'm saying? You can basically, like I said, you can create tokens for properties that's already under construction, or you can use tokens to raise capital for a pending investment that you want to do. You know what I'm saying? And I would say that's one of the most powerful things. That's why I had to say it twice, because it's that powerful. You know, you can use it to raise capital, you know, and you can use it to leverage a property and basically break it up into tokens, kind of like a stock offering. You know what I'm saying? Like how they do stock in a private sale before an IPO. That's kind of like another way to look at it. You feel me? So like when people say like, well, how does tokenized real estate work? You know, and like, what the fuck? Like, how does this shit even work? You know what I'm saying? In a nutshell, tokenized real estate is one way to secure like a real world asset. You know what I'm saying? to secure it. You know what I'm saying? You're securing the asset and you're dividing it, or like I said, you're breaking it up into like look at it like stock. You're breaking it up into shares that you can sell to potential investors on the open market. But instead of that scenario, you're breaking it into tokens that you can sell on the blockchain. In the same way, you tokenizing it. Like I said, you tokenizing the asset, and you're dividing the shares up, or the tokens that represent a predefined number. You know what I'm saying? Let's just say $50. I'll use that because that's just a nice round number, $50, right? And that'll make more sense later. Benefits of tokenization. You know what I'm saying? Let's see. Well, one of the benefits is you get to realize your investment sooner. You know what I'm saying? A lot of when it comes to real estate, man, like majority of the time, you have to hold that shit for a long time. Like you have to hold your investment for a long time and let time, and increase the value. Like you buy a house in an undeveloped area, right? And you might buy it for like $150K. Buy a house in like a housing development, right? Ain't shit around. But like in 10 years, it's a high school there, it's a Walmart there, it's a couple strip malls there, it's a rec center, or depending on like if you got lucky, they might build like a amphitheater or some shit like a couple miles down the road, like you know what I'm saying, and it brings up the value of everything around the area. So like your property gets the runoff from some of that value. So like your value of your home increases, you know what I'm saying? Or the value of your building, your real estate increases, your property increases. You might own a commercial building. That shit might actually go up and appreciate based on what's going on in the area. But that takes time, feel me? Whereas if you tokenize it, you have a chance to realize your investment sooner, because you might buy a home, or like buy let's say you buy a 30% interest in a tokenized interest in a property, and you might 10x your money depending on if somebody wants to buy your tokens from you. It'll be the same thing as like if I have like Bitcoin, and I bought my Bitcoin at 30,000, and then the price goes up to 60,000. Yeah, I just gotta, like I said, I just made 30K basically. That's no different than me buying a home for 60,000 or 30,000, and then the value of the home appreciates to 60,000. But I bought my home at 30,000. I bought a home, and I bought $30,000 worth of tokens, in this home, this rental property or whatever. And then somebody else comes and says, "Hey man, I want to buy that shit from you for 60." Because now the market value is 60. So I just basically doubled my money. You know what I'm saying? If I want to, I could sell those tokens if I want to that other party, you know what I'm saying? And do it the same way. But the only thing with the tokenized part, time doesn't have to be involved when it comes to like the appreciation part to kick in. Somebody could just offer me that. Somebody can just be like, "Yo, bro, like I want to pay you this," because they might know something about the area that I don't. I might have just bought it on a whim. You know what I'm saying? Like, yeah, I like this house or whatever. I'm gonna buy it, or I'm gonna invest in it. Whereas this other person is like a land developer or something. He might want to put like a Jamba Juice or some shit in the area or whatever. And, he got plans for the area, or he might know some people that have plans for the area, or he might be aware of how the city is expanding. He might know the direction that the city is going to expand in first, so he knows exactly where the hot real estate going to be. So, but you don't, you just somebody that just, petty investor or whatever, and they like, okay, I'm gonna give you 60. I'm gonna give you 60,000, for your equity interest in this, because that's how bad I want it. And you can double up that way, and you can do it in half the time. Is what I'm saying. Like you can determine the price by selling shares on a secondary market, via the stock exchange, or in blockchain terms, through an alternate trading system. Like I said, that's kind of like a marketplace, it's like a blockchain marketplace, or in layman's terms, it'd be like a digital stock exchange. You know what I'm saying? So usually through the token, which functions as a placeholder, and use that placeholder to leverage the percentage that's tied up into the asset. You know what I'm saying? Like I said, it's the same thing. Like you buy it for X, sell it for Y, but you can do it in a quicker time span. You could essentially buy a percentage of a property which is held in tokens. Like I said, I know, and for somebody that I know, you're like, hey man, I just can't wrap my head around the tokens. Look at it like stock then. If you can't understand the token theory, but you're breaking it up. It's percentage wise. You're breaking it up, and as the asset appreciates over time, you can leverage, your equity. Your leverage or your equity will increase. As the asset appreciates. So that's another way you can make money. You can hold it and just let it increase that way, and then sell it at a later time, just like you do traditional real estate. But the thing about it is, with tokenization, you don't have to buy 100% of the property. Like that's the powerful part about it. I no longer, if I want a house, it's a house that's $150,000. I might only have $75K, but I can buy 50% of that house. I don't have to buy 100% of that home or that building. I can buy 50% of it, and yeah, I might be losing. In a manner of speaking, I might be losing like half of the cash flow. It might bring in, let's say it brings in $4,000 a month in cash flow, right? Because in real estate, we care about cash flow. So like, let's say it brings in $4,000 a month cash flow as far as like rents are concerned, right? After taxes and bills and all that shit, it still brings in $4,000 a month. But since I only own 50% of that, I'm only privy to $2,000 a month. But that's still $2,000 a month in cash flow, and I only had to invest 50% in that asset. I didn't have to put up 100%. I'm not 100% committed to that. You know what I'm saying? I only own a percentage. It's broken up now. It's no longer like an all or nothing situation. You feel me? You could sell the interest to another party, like I said, in a faster, more streamlined way, which basically eliminates the need for many of the other expenses, you know what I'm saying? Like third-party providers, you know what I'm saying? Things of that nature, So basically, like, it improves the speed at which you can get rid of that shit, and sell it on the market, you know what I'm saying? So, like I said, it improves the trading speed and the security and the price transparency, because, like, it's on the blockchain. How you don't get no more transparent than that, you know what I'm saying? And examples, right? Example number one, like, I'm gonna just give some examples real quick, like, because I wrote all this shit down. But example number one, let's say suppose you want to tokenize, a home that's like 200,000 square feet and is worth 60 million. A real simple way to divide the property would be to divide it into shares and then offer like 1 share per square foot. That's just like a basic example of how you could do it. You know what I'm saying? So you basically would divide the property into, 200,000 shares, and each one of those shares will represent 1 square foot per the property. And you would value that shit at like $600 a square foot. So it'd be like $600 a square foot that you could literally sell square footage of the home or the building. Do you understand how dope that is? I don't think you hearing me. Like, another example, like, so you imagine converting like the fiat value of your home or your commercial property into shares, right? But you're doing it in a digital format. So then you put the property up for like a bid, like you would the stock market, like a stock market offering or a private sale before pre-IPO. And then you would sell each of those shares, or / tokens at a set price with the number total of issued tokens equaling the total value of the property. You know what I'm saying? So let me give you an example to build off of that. So a quick example would be like, a house is worth, or a building is worth $250K, right? 3 bedroom, 2 bath, right? So you put it up for sale for a minimum bid of 1 token per $50 a token. So each token is $50, right? And you break. So you have a property. Now follow me. You have a property that's $250,000, 3 bedroom, 2 bath home or whatever, right? Big home, big ass house. And you break that house up. You're taking that $250 fiat, right? It's worth $250 as far as fiat. And then you tokenize it. So I take my magic wand, boom, I tokenize it. And I break it up into $50 coins. So each $50 coin represents the total number, which is 250K, right? So you follow me? So I have a $250,000 home, 3-bedroom, 2-bath house with a minimum bid of one token set at $50 per token, with a set amount of tokens that are issued, representative of the whole amount, which is 250K, right? So in this case, the total would be $250,000 divided by $50 PPT, price per token, which would equal 5,000 total tokens available. That represents the total value. Because if you take $50 and you times it by 5,000, you get 250K. See how I just did that? So basically a $250,000 house broken up into $50 coins or tokens would be 5,000 tokens. So now I just basically turned my $250,000 house into 5,000 tokens. And I priced them at $50 per token. So let's say somebody only has $125,000, but they really, really, really like this house. They're like, man, I really want to, I can't own it all, but damn it, I'm going to get half of it. All they got to do is buy, now instead of putting up 250K, they put up 125K, and in exchange, I give them 2,500 tokens. And I still might own half of it. I still might own half the house. You know what I'm saying? If I don't put the whole, if somebody else don't want to buy the other half, I can just tokenize half of it. I might tokenize it to a family member or something, and they take half. They take half on the blockchain, and then I got the other half on the blockchain. And that's where platforms like Lofty AI, for example, that I really like very much. You know what I'm saying? And this isn't no paid sponsorship for them and nothing like that. Like it's a dope platform. You know what I'm saying? And one way I found it is because I invest in Algorand. I like the Algorand blockchain, and I like the Algorand token. But I found it via, all my Algorand due diligence, right? And Lofty AI is basically a liquid real estate marketplace that's built on the Algorand blockchain. So basically, just to give you a quick rundown, like Lofty AI lets people invest in tokenized investment properties, real estate, for $50. $50 representative, like I said, the token price. All properties are vetted by their local investment team and proprietary artificial intelligence. Remember I told you that in the other episode, AI was coming. And tokens can be sold anytime for no penalties or fees. Like, that's some powerful shit. Like, I'm sorry, that's super powerful. That gives average person with a decent amount of capital to work with a lot of leverage. They give you a lot of power, man. You know what I'm saying? And you cutting out all the middleman bullshit. You ain't got to go through a bunch of hoops. Like, you know what I'm saying? Just do your due diligence on the property. You like it. You set up your Algorand wallet. You go on the website. You look at you bid on some stuff, and it's like the stock market. You literally buying shares in different properties. Or if you got enough money, you can just buy a whole fucking property outright. But it's tokenized. It lets you diversify into real estate. You understand what I'm saying? Like, you literally can jump into real estate in less than 5 minutes. That easy. It means, liquidity of your tokens, lower minimums, and you get full governance of your investment properties. Now, let me stop, because a lot of people are like, well, what the fuck is governance? So, like, governance tokens or governance are cryptocurrencies that represent voting power on a blockchain. Like, that's why the word is governance. Like, it's like a government onto itself. You know what I'm saying? It's governance. They represent the main utility tokens, vis-a-vis, DeFi protocols, since they distribute powers and rights to users via the tokens. So, like, you have your governance, you have power. You you have leverage, you know what I'm saying? Like you have voting power. So like, let's say I sell 50% of my house to my brother or like my friend or something. Well, guess what? We have to vote now. If I want to, let's say he doesn't want to live in the house, and let's say I don't live in the house, right? Like I have my own house, he has his own house, but we invested in this property together. Well, since there's governance involved, we have to vote on shit. So since he owns 50% and I own 50%, we have to vote on everything. You know what I'm saying? And if there's no agreement, then we can't really move forward. It's like literally that. It's that simple. Like it's like government. But however, if we vote on something, then we can make it happen. It's not forcing you, but like it's a way to get people to like to really be cooperative with each other and work with each other and talk with each other and dialogue with each other and find out and really expand and expound on things. So like, let's say I want to install like marble countertops. You know, my brother or my friend or whoever, they might know a lot more about real estate than me. But me being like a really big-headed investor, I want to go, you know, all out. You know, I want to make the house look immaculate. You know what I'm saying? But it might be like in a low neighborhood where it's like, bro, like having marble countertops really isn't a good look. You know what I'm saying? It's actually we're gonna lose rent money, you know, investing in that. So since we have governance, you know, we would basically put it to a vote, and I would say, hey, I want marble countertops, and then the other person would say, well, no, I think we should put like these other type of countertops because they're a third of the cost and they're just as strong and they look just as good. And besides, the neighborhood, putting marble countertops in there is actually gonna, if we ever do sell the house, you know what I'm saying, like it's really not gonna make that much of a difference in the sale because the property values of the other homes really aren't conducive to like our house having that in particular. You know what I'm saying? And I might agree with it. Like, you know what? Yeah, you're right. You know what I'm saying? Let's go with the other option. So that's just like a really quick caveat. You know what I'm saying? And a lot of people are like, well, who's going to manage it and who's going to do this? Well, like I said, if you use a platform like Lofty, like one of the cool things about Lofty is like they manage the shit. Like, so it's like, you know, they have a local property management company that manages the property on your behalf. You know, they take care of sourcing tenants, collecting rents, and managing repairs. You know what I'm saying? The investment team, you know, has worked with the same management property company for a bunch of years. You know what I'm saying? So like I said, vet these companies. Don't take my word for it. You know what I'm saying? This isn't like financial advice or anything. I want you to really, I'm throwing it out there because I know a lot of people are like, man, you don't really be telling us like specifically what you look at or whatever. So this is something that I specifically use and look at, you know, right now currently in the blockchain space. Okay, this is what Ant looks at. So like, if I ain't saying take this on my recommendation, but like look at it. You know what I'm saying? At least look at the website. You know, there ain't no criminal shit involved. Like, bro, as far as like me telling you to go look at it, vet it yourself. You know what I'm saying? See what you think. But like, I just wanted to touch on this, man. Tokenized real estate. It's here. It's coming. It's coming in hot. Get ready. You know what I'm saying? You're going to hear about it a lot. It's been really low key because, you know, like it's a lot of shit going on in the world. So a lot of people aren't really thinking about this. And it's like, it's such in its infancy, kind of like crypto was 10 years ago, 15 years ago. Like a lot of people are real apprehensive and they just like, man, I just can't imagine like, it goes over a lot of people's heads is what I'm getting at. So like vet it, read up on it, look at the FAQ tab, you know, the frequently asked questions. They have a chat software where you can literally ask the Lofty team every question under the sun. They're very receptive. They respond back really quickly, you know, things of that nature. And there's plenty of other platforms I could talk about, but like I'm trying to keep this shit short and sweet. You know, I just wanted to touch on it, and you know, I'll build on it later in probably another episode or whatever. But I just wanted to throw this quick nugget out there and let people know like there's other avenues to invest in crypto, not just tokens and coins and NFTs. Like you might not want to do none of that shit. You might be like, man, like this crypto thing is booming, but it's just so over my head. Well, guess what? if you into real estate, this is a viable avenue for you to take also. And it's blockchain based, it's crypto based, it has all the bells and whistles of all that shit, without a lot of the headache that you might be that you might be accustomed to, is what I'm saying. So just think about it, you know what I'm saying? And then, look into it, man, and just, see what you think. All right, later.
Thanks for listening to the Build or Destroy podcast with your host, Anthony Barber Jr., aka The Builder. We hope you enjoyed our deep dive into all the tips and tricks you can use to boss your life up. If you're interested in expanding your mind and reaching your definition of freedom and how these ideas and views can be applied in the real world, tap in with us next week. As always, you can head over to www.builderslsb.com to cop some motivation, dope merch, and sign up to our email list. And don't forget to check out all the links and resources in the show notes. That's all for this episode, folks. And as always, boss up instead of laying down.